Jordan, g'day. Thanks for joining us today, mate.
Hi, Greg. Thanks for having me on. Looking forward to a chat.
No worries. Well, we're going to be chatting about Bitcoin and gold and comparing the two and all things that are going on in the marketplace recently. But before we get into the discussion, maybe just give viewers a bit of a background on who you are and where you're coming from in this debate today.
Yeah, sure. So I work for the Perth Mint. My job title is a manager for listed products and investment research. So I look after, I suppose, sales and business development for some of our clients, and then also obviously write a fair bit of commentary about what's going on in precious metal markets and I suppose financial markets more generally. Have had a pretty long interest in crypto and, or to be fair, more Bitcoin centric. Especially given it's obviously marketed quite a bit as a digital gold or gold 2.0, etc. Really looking forward to having a conversation about the differences, the similarities between the two asset classes, and I suppose the way I look at the two, from my perspective.
I think one of the reasons why I wanted to get you on and chat today, like I've followed your stuff for a number of years, and you've been involved in the bullion and gold markets for a long time. So you've got a deep knowledge of how all that works and its relationship with macroeconomics and stuff like that. But I've always found your commentary to be quite rational. You're not on sort of one extreme side of any boat. So it's always good to talk to people that do have some reasonably balanced views of all this. But as you just mentioned, the fact that Bitcoin is marketed as digital gold, and in recent, well, I guess since its inaugurational founding, or whatever you want to call it, back in 2008, the outperformance has been massive. Now, if you think about the comparison, I think it's an unfair comparison because you've had gold that's had, let's say, 5,000 years of price discovery versus Bitcoin of 1 decade. But more sort of for listeners, what's your view on the Bitcoin versus gold argument? Is Bitcoin genuinely taking interest out of the gold market at the moment, and is it becoming seen as more of a proper hedge against the things that gold used to be traditionally seen as?
Look, I think that the amount of commentary that there is about Bitcoin competing with gold dwarfs the actual competition that is happening out in the marketplace and the decisions that investors make to allocate to one or the other, or in fact neither. So maybe if I start it by looking at, we're kind of recording this in August 2021. Gold is basically now, has now basically spent a 10-year period in US dollar terms, where it sort of peaked at roughly $1,900 an ounce a decade ago, dropped to about $1,050 in December 2015, and is now basically back around the 1,800 mark. It obviously popped above 2,000 for a little bit last year. If you kind of look at what are the main reasons why gold has had a tougher decade in US dollar terms? I look at it and I think Bitcoin is probably one of maybe 5 factors and probably the most insignificant of the lot. So if you look at that 10-year period as a whole, it's been an unbelievable period for US equities, pretty much the best 10-year period we've seen. Whether or not you would believe the official CPI numbers, and I'm sure there's a lot of people that don't, the reality is that the last 10 years have seen the lowest rates of average inflation over the last 7 decades. So, in as much as gold is traditionally seen as an inflation hedge, there's been heaps of QE, but there actually hasn't been a lot of CPI inflation that actually gold's needed to hedge against. And I think the other thing in terms of, that's driven gold's, tough 10 years, as it were, is just how fabulous the preceding 10 years were and how popular it was roughly a decade ago. So there's a couple of metrics that are maybe just worth sharing with listeners on that, Greg. So one that I still think is pretty incredible is back in 2011, GLD, which is like the biggest gold ETF in the world, that was the biggest ETF full stop in the United States. It was bigger than any equity ETF, bigger than any fixed income ETF, you name it. So that's a pretty good illustration of how popular gold was back then. And also there's a great, I don't know if you're familiar with the guys over at Gallup that do polls on all kinds of things of American investors, citizens, you name it. They do a survey every year where they sort of say, look, what do you reckon is the best long-term investment? And they ask investors, is it gold? Is it equities? Is it real estate? Is it bonds, savings accounts? You name it. 2011, gold was by far the most popular answer. It was like about 35% of investors chose gold. This year, it's closer to like 15%, right? So, 10 years ago, gold was incredibly popular. The macro case was pretty clear because we were starting to see QE and people were a bit worried about inflation. People were still worried about the aftermath of the GFC. All of those reasons help explain why gold's had a bit of a tough 10 years. The emergence of Bitcoin, I see as being a factor that's maybe held gold back a little bit, but nowhere near as much as we talk about, or as what some people talk about. And whilst it's true to say Bitcoin has dramatically outperformed gold from a performance perspective over the last 10 years, there's probably 2 points I'd make on that. One, it's outperformed everything over 10 years, right? So it's, if performance is the only thing, then it's not just gold that looks like a laggard over the last decade. Equities, real estate, everything looks like a laggard, except maybe Dogecoin, right? Because I think that's outperformed Bitcoin in the last little while. But two other elements to this which are linked, Greg, is one, Bitcoin started with a market cap a decade ago of basically zero, right? So to your point, gold's had 5,000 years of track record, 5,000 years worth of market value being built. So even in that context, right now, the market capitalization of Bitcoin's roughly $900 billion. I think if you take roughly the current price times the supply that's already been mined. So let's say, Bitcoin has created, or the market has assigned $900 billion of value to Bitcoin in the last decade. If you look at the amount of gold that has been mined in the last decade and assign the current market price of roughly $1,800 an ounce to that gold, which is a fair way of, it's basically the same thing you're doing with the Bitcoin analysis, the market value of all the gold that has been mined in the last 10 years and the total gold supply has increased by more than $2 trillion, right? So in pure performance terms, Bitcoin has blown gold out of the water, blown everything out of the water in the last decade. In terms of market value accretion, equity markets, gold markets, you name it, have added far more in market value than Bitcoin or indeed the entire crypto universe has. So,
I guess that's a way of actually leading to the question, as an organisation, does Perth Mint see that as a potential threat to gold, I guess to your business, in that points to potentially a lot of catch-up still for Bitcoin? Because what you've got is a massive gold market, and the value of that gold market is quite huge. Now, if Bitcoin is a competing store of value that fulfills a similar function to gold, but in some ways does that better in a digital economy, to what extent is that a threat to I guess the continued success of the gold market, especially in Australia, given that it is a very important export and a very important industry for our country?
Yeah, it's a good question. I think the way that I would the way that I look at it, Greg, is firstly, I suppose separating the investment case for gold versus Bitcoin, and having a fair and balanced analysis of the pros and cons of each, or the strengths and weaknesses of each. And I've obviously written a fair bit about that, and certainly from a return potential perspective, Bitcoin and cryptos more generally have shown that they can add extraordinary value in short periods of time, but of course they can lose it as well. From a liquidity, credit risk perspective, demonstrated hedge against higher inflation, demonstrated hedge whenever equity markets are volatile. Gold still, I think, clearly wins hands down from that perspective. Even from a perspective of ease of allocation, if you want to buy gold and hold that in your portfolio, whether you're a direct investor or you're an institutional investor, it is it's not relatively easy. It's easy to do that and hold it in a way where you can be very comfortable around chain of custody, legal title, you name it. I was only reading an article earlier this week on a fund manager here in Australia that's very bullish on Bitcoin and see it as a useful asset to hold. Now, the way they're holding Bitcoin is actually by owning shares in MicroStrategy, which is obviously that company that's put a really sizable Bitcoin position on its balance sheet.
Yep.
So I find that really fascinating and a really interesting illustration of where the Bitcoin market is today, in the sense that it's still so nascent that an institutional investor is saying, you know what, I can't even get a pure exposure to Bitcoin in my portfolio in a way that I feel safe from a operational, legal, custody perspective. So I'm going to go and buy shares in a listed company that actually does all these other kind of things, bring in all this idiosyncratic risk. And that to me still seems the best way of owning Bitcoin or owning exposure to Bitcoin. But if I can maybe take it away from sort of gold v Bitcoin for a second, if you look at the statistics of, say, the market value of gold, the market value of Bitcoin, and compare that to the total value of equity markets, total value of fixed income markets, you name it, the value of gold and sort of crypto assets might be somewhere in the vicinity of 3 to 4% of global financial assets. Not PIMCO. Bridgewater had a paper out on this only last year, looking at, they were specifically looking at gold, but you can sort of easily add the Bitcoin number on top. So if your argument is that, let's call it gold and crypto combined, is only ever going to be 3 or 4% of the total universe of investable assets, then yes, you've got, you got to argue which one of them is going to take market share from the other. But the reality is, if you look at, if you break those numbers down, what we're effectively saying is that for every $100 of investment assets that are out there, $96 of them are not in gold or crypto right now, and only 4 are. Now, when you look at valuations in financial markets, you look at the fact that the majority of sovereign bond markets are now trading at negative real yields. Most of the developed world, any money that people have in savings is going backwards when you take inflation into account. I think you can make a pretty good case, and history would certainly agree with this, that the value of gold as a share of total financial assets and potentially the value of Bitcoin as well could actually increase pretty sizably as this market cycle plays out. So, it's not really so much whether Bitcoin is competing with gold, it's more whether or not gold can actually take market share from equities, from fixed income, etc. I would suggest there's a decent chance it can, and it quite likely will. And I'm sure, I think there's a decent chance Bitcoin might benefit from that as well.
I hope you enjoyed that preview from New Money Investor. To get access to the full video and much more, please click on the link below.